Hey guys, so in today's video we are going to be going over the 10 things that I look for in a stock when I'm considering buying it. And so these aren't the only 10 things that I look for when I'm considering buying a stock, but these are 10 things that I think are relatively important that a company has. And they don't have to have every single one of the 10, they just need to meet a decent amount of them and I'll consider an investment in the company. So starting off, the first thing that I like to see in a stock is that it pays a dividend. I like dividends because it allows for me to reinvest the dividend and get more shares of the company each quarter, which is great because it has a nice compounding effect on the number of shares I have, and it will just be great for getting larger long-term returns. And then it's also great because it shows that the management is shareholder friendly. And so if they're willing to pay a dividend, then it means that they're committed to delivering strong shareholder returns, which I like to see. And then the second thing that I like to see in a company is that they've been growing their dividend. So this is something like they've raised their dividend every year for the last 5 years or 10 years. That shows that they are committed to raising their dividend, which again affirms that they are committed to delivering strong shareholder returns and that they have the cash to pay out a dividend and that they're growing the amount of money they're bringing in so that they can grow the dividend with that. So it shows that they're in a strong financial position and that they are committed to delivering good returns to shareholders. And then the third thing is I like for a company to have a low payout ratio. So this means that they aren't paying out all of their earnings in dividends. Normally below 50 or 60% is ideal. That way they have room to raise their dividend and also room to reinvest in their company. So then the fourth thing that I look for in a company is that they have a low price to earnings. I like to compare their price to earnings to their historical average and to their industry average, and hopefully their current price to earnings will be lower than both of those. I also like when a company has a price to earnings under 20. I know you're going to get varying price to earnings among the different sectors. So Coke, which is a safe consumer staples company, is going to have a higher price to earnings than a company that relies very heavily on a commodity. You're going to have to compare the price to earnings to the industry average, and you're going to have to compare the price to earnings to the historical average of the stock. So then the fifth thing that I look for in a company when I'm considering buying the stock is strong top line and bottom line growth over the last 5 years. Now the growth doesn't need to be every single year for the 5 years or the last year of the 5 years. They just need to have a strong upward trajectory over the course of the 5 years. I also like to see a company that has strong future growth prospects. So whether this is a new product or a new project that the company is working on, I like it when the company has some things in the future that they can do to continue growing earnings and revenue. So then the next thing I look for is a strong balance sheet. And it's very important that a company has a strong balance sheet so that they can weather any economic downturns and they can continue reinvesting in their business and growing. So what I look for is a lot of cash, ideally, and low debt. I specifically look for low debt-free cash flow because that means that they'll be able to continue paying off their debt in the future if they have low debt-free cash flow. So the next thing that I look for in a company is that they have a big moat. So that's pretty much how many barriers to entry are there into the industry that the company is in. So a company like AT&T has a pretty big moat because it's very difficult to set up a telecommunications company, and AT&T does have some brand recognition, and so they have a pretty big moat. But a company like Blue Apron, I don't know if you guys know what Blue Apron is, but it IPO'd, I think, last week. But they don't have a very big moat because they don't have a very strong brand, and what they do is just ship you food in the mail and then a recipe with that food and you cook it, and so it's really easy for anyone to rip them off. Amazon just merged with Whole Foods. Amazon could start doing that, and they could really easily crush Blue Apron, so Blue Apron would not have a very big moat. So like I said, I look for a company with a big moat. So then I also like companies that have a past history of beating the S&P 500. So this means that they're just a strong company that has been growing for the last 10 or 15 years, and hopefully they've beaten the S&P 500 for most of that. But I also like companies that have recently pulled back in price because I think the market tends to overdo upswings in price, but also tends to overdo downturns in price. So hopefully if they've gone down a lot, the market will have overdone that and they'll be trading at an attractive valuation, and then I can buy the stock and it will return to its growth that it had before it went down in price. So those are the 10 things that I look for when I'm considering an investment in a company. What do you guys look for when you're considering investing in companies? Leave a comment down below. Thank you for watching. Please remember to like and subscribe.